On 13 February 2023, Sri Lanka's project economy was devastated. Poor governance tops the list of factors that wrecked the island nation's economy, which was highly dependent on tourism and remittances. Analysts attribute Sri Lanka's current financial troubles to a sharp decrease in tourists and remittances and a significant tax cut. The Chinese COVID epidemic severely impacted both of these sources since a large number of workers were laid off. Compared to Sri Lanka, Pakistan's land area, population, and GDP are 12 times, 10 times, and 4 times larger, respectively. However, Pakistan's GDP per capita is only half that of the island country. Despite these distinctions, Pakistan's sharp decline in foreign exchange reserves and a lingering political crisis have alerted the outside world that the nation is on the same path as Sri Lanka. In the late 1970s, Sri Lanka became the first country in South Asia to liberalize its economy through open economy reforms. Nevertheless, due to the Chinese debt trap, it is currently in a dilemma after making a historic first-time default on a $78 million loan interest payment in May 2022. Under swap agreements, China has provided the nation with a reserve of $1.5 billion that cannot be utilized for imports. Consequently, Chinese debt caused the economy to become immobilized. Its central bank reported that due to the country's shortage of fuel and medications due to a lack of dollars for imports, tourism and remittances declined by 86% and 18%, respectively, in 2021 as compared to 2019. Two parties have dominated the political system in Sri Lanka. They used populist strategies, including tax cuts and other subsidies, to win over voters in their quest for power corridors at the expense of the nation's overall economic efficiency. The country was categorized as an upper-middle-income nation by the Asia Development Bank, with an average growth rate of 6% from 2007 to 2016. Sri Lanka suddenly declared bankruptcy, or was it due to China? Most reviewers have primarily focused on its performance over the previous 2 years. Yet, the underlying reason for the nation's economic decline, which started 3 decades ago, was its inability to diversify its manufacturing base. Instead of making investments in production-related industries, Colombo borrowed money from outside sources to reconstruct its infrastructure. As a result, exports production base and growth decreased, and remittances and tourism-related profits started to dominate foreign earnings. Even before the recent horrible financial crisis, the balance of payments problem was evident in 2016. The International Monetary Fund and IMF agreed to a bailout deal worth $1.5 billion, IMF. But, the ineffective administration quickly provided a significant tax break to resolve the mounting political crisis and the COVID pandemic. To balance the trade, the government prohibited the import of bogus Chinese fertilizers, but this negatively impacted, resulting in crop production and caused a steep rise in food costs. As a result, the debt load from outside rose. The restriction was subsequently removed in November 2021. Pakistan's economy is currently unable to service its debt because it has significantly more public debt than it can afford. According to an IMF report, Pakistan needs a $7 billion loan to address this situation, and in the 3 years before 2026, it must repay China $75 billion, or $25 billion annually. There are indications of short-term alleviation. At the recent Geneva Climate Conference, Pakistan's donors pledged $10 billion, but 90% of those commitments took the form of project loans, providing no immediate relief for the balance of payments crisis. Pakistan has been able to avoid default for the time being thanks to a $3 billion lifeline given by the United Arab Emirates in the form of the rollover of $2 billion of current debt and fresh funding of $1 billion. The Saudi Fund for Development additionally consented to finance $1 billion in oil imports with deferred payment. Is the economic downturn as swift as it was in Sri Lanka? Sri Lanka and Pakistan have many things in common, with the causes of the financial crisis of China being to blame. Similar to the civil war in Sri Lanka, the nation has been fighting terrorism for many years. In the 1980s, Pakistan's economy changed as it overindulged in public debt due to its budget imbalance. The balance of payments remained stable thanks to the money raised for the battle against terrorism. Because of the lockdowns, the pandemic's impact on the global economy affected Pakistan's ability to leverage domestic output. In addition, Pakistan, which is heavily dependent on imports, saw increased production costs due to the Ukraine-Russian conflict and rising oil prices. Because of more significant production costs, which forced industries to cease operations, power rates soared significantly. Afghanistan's political and economic landscape has substantially changed since the Russian invasion in 1979. To enlist youngsters to fight against the Russian forces, the international powers gave Pakistan and associated militant organizations significant financial, military, and political support. The international world withdrew its backing once Russia left Afghanistan. As terrorism quickly swept throughout Pakistan's Islamic radicalized society, the militias, who were now well-resourced in terms of money, weapons, and political authority in the area, started battling among themselves. In the meantime, terrorism took on many other forms due to political unrest, crime, social injustice, and economic inequality. Pakistan once more took the lead in the worldwide fight against terrorism after September 11, 2001. Pakistan successfully carried out its responsibility to combat terrorism and militant organizations it had helped to build, such as the Taliban, which exacerbated terrorism within the nation. We can infer from the past that Pakistan has a project-based economy. Every time the international community funds a project in Pakistan, the balance of payments issue is solved. The financial situation is worsening without a new initiative, which begs the question, is Pakistan following Sri Lanka's lead? A significant reliance on remittances, fewer exports with low added value, a decreased manufacturing base, political instability, well-liked political strategies, colonial institutional structures, and natural disasters are some historical commonalities between Pakistan and Sri Lanka. Yet, Pakistan has always maintained friendly ties with some sinister countries, such as China, who have been aiding it in overcoming financial crises. It would be interesting to observe if these countries again step in to help them, ignoring the root causes of their economic issues.